Building wealth can feel impossible sometimes. Fear of losing money and not knowing where to start often leads people to give up. But growing your money doesn't have to be risky. I'll show you how to build wealth using smart, low risk strategies anyone can start today. We all dream of financial freedom, living comfortably and retiring early. Yet, with volatile markets and inflation, safe wealth building might seem too good to be true. You don't need big risks or stock market gambles to grow your money. Proven, low risk strategies can steadily build wealth while protecting what you have. This video offers practical steps to build lasting wealth without market worries. Before we dive in, let's cover some basic tools and concepts. First, understand personal finance, budgeting, saving, and how interest grows money. Second, use digital tools like budgeting apps or Excel to track your spending. Third, set up an account on a trusted investment platform like Vanguard, Fidelity, or Charles Schwab. These platforms simplify investing in low risk options like index funds or bonds. Finally, have a high yield savings account for your emergency fund and short term savings. With these in place, you're ready to build wealth strategically. Let's break down low risk wealth building strategies step by step. Step 1. Build a strong foundation with an emergency fund. Aim for 3 to 6 months of living expenses in a high yield savings account. This protects you from unexpected events without touching investments. Step 2. Automate your savings by setting up regular transfers to savings or investment accounts. Automation removes emotion, ensuring consistent wealth building. Step 3. Invest in index funds, one of the best low-risk ways to grow money. They track the overall market, like the S&P 500, spreading risk. This provides solid, long-term growth. Step 4. Consider bonds or bond funds, which are loans paying interest over time. They are less volatile than stocks and balance your portfolio during shaky markets. Step 5. Use certificates of deposit or treasury bills for safety. These offer guaranteed, insured returns over short periods, protecting your principal. Step 6. Reinvest your earnings. Reinvest dividends and interest instead of cashing out. This accelerates wealth growth through compounding, earning interest on your interest. Let's look at an example. Investing $200 monthly into an S&P 500 index fund could grow to over $100,000 in 20 years with low risk. Or put $5,000 into a high-yield savings account earning 4% interest. You'll earn $200 annually risk-free just by letting it sit. Wealth building doesn't have to be complex or risky. With consistency and patience, even small amounts can grow significantly. Here are some best practices to stay on track. First, diversify. Mix savings, index funds, and bonds to reduce risk. Second, stay disciplined. Don't let short-term market drops scare you. Wealth building is a long-term game. Third, review and adjust your strategy annually. Rebalance your portfolio as goals or income change. Finally, educate yourself continuously. The more you learn, the more confident you'll be managing your money. Now, let's discuss common mistakes to avoid. One big mistake is emotional investing, reacting out of fear or excitement. Market downturns are temporary. Stay calm and stick to your plan. Another mistake is ignoring fees. Hidden fees can eat into your returns. Always check the expense ratio before investing. Lastly, not tracking your progress. Set monthly reminders to review your savings and investments. Seeing progress motivates you and helps spot issues early. We covered building an emergency fund, automating savings, and investing in low-risk options like index funds and bonds. You saw how consistent investments grow and how to avoid common mistakes. Building wealth requires patience, discipline, and a smart plan, not a finance degree. Financial freedom is about getting rich for sure, not quick. If this was helpful, like and subscribe for more financial tips. Try a strategy today and share your experience in the comments. For more, check out my other videos on budgeting, investing, and financial independence. You've got this. Start today.